as crazy as it sounds, like I think inflation is going to get under control. My problem is it going to get under control because they pushed it too far and they broke the economy and pushed us into this recession, which now people don't believe is going to happen anymore. It's still going to happen.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, is the market getting too complacent? Did, in fact, the economists blow it and we're not going to have a recession? Imagine if they threw a recession and nobody came. Well, James Locke is with us now. And James, great to have you back on. So even the bears are throwing in the towel now. What are you seeing?
Well, just on that kind of point, whether this recession is real or not, we'll see. I'm always kind of looking at what the professionals are saying, that sort of thing, and like I was saying, the famous Morgan analyst named Mike Wilson, he's a huge bear market analyst, and he was wrong from the S&P 3,500 to 4,400, and finally kind of came out and apologized and said, "Yeah, I got it wrong. Maybe the market isn't as bearish as I had thought." Well, when the most bearish guy in a room turns bullish, does that mean the market's due for a correction? Probably, right? That means, maybe it's time to get short a little bit, or maybe it's time to, no one ever, from the trading adage, right? No one ever goes poor ring in the cash register, right? So if you maybe take some money off the table, but some of the other indications we saw last year, there were a lot of people going into T-bills. You saw a lot of that kind of into that safety. And now all of a sudden, no one cares about T-bills. You're seeing people coming out of T-bills, going into these tech stocks, as the market's going up into the higher. It's almost like it's a Hollywood movie script, right? You can't do this any better. So between strategists saying, "Oh, maybe I was wrong and we're going up," and people exiting safe money and going into tech stocks, and AI can solve everything. Like I said, it's maybe it's an indication to book some gains. That's kind of where I'm getting at.
So you don't think, James, you don't think that AI can solve all our problems?
I think AI is going to help our society. I don't know how yet, but it's going to help us in ways that we can't imagine yet. Is it going to solve all our problems? I am very confident that it will not do that. It needs to be integrated into society and figured out how it can help, without the Terminator coming in, right? That's the always fear.
All right. So what are we going to see? You think that they're actually going to be right, but they're just going to be right at the wrong time?
Well, I mean, in the short run, no one really knows what AI is going to do, right? In the long run, it's going to be very profitable for a lot of people. So thing is it going to be profitable for everyone? Who knows? Can NVIDIA keep this rally going? At some point reality has to set in and AI has to actually do something, right? Like I said, when I say taking money off the table, it's not like I'm sitting here saying there's a crash coming, but we could easily see a 10 to 15% correction in the market, and it'll take a lot of people by surprise.
It always does.
Yeah.
It always does. So what about with rates where they are here? You got mortgage rates over 7% for a 30-year fixed mortgage, and you've got the Fed funds rate trading between 5.25% and 5.5%, and it just doesn't seem like anybody cares.
Right, and here's the thing, right? We can sit here and talk about reality till we're blue in the face, right? Rates, Fed funds over 5%, war in Europe, by the way, people just forget about that. There's a constant threat of inflation. I mean, we were just talking about how inflation was unbeatable 9 months ago, and now we're talking about, you start hearing about deflation. Like we beat everything in 9 months, and that's it. So we can talk about it, but I don't know that the everyday investor is really kind of believing that. And that's, you hate to say it, but it's one of those things. It's like, you want to know what the market's doing, don't follow the smart money, follow the dumb money, right? Right. That's going to bounce in their face kind of thing. But, 9 months to go from hyperinflation to deflation seems awfully quick, right? To me, I don't know that inflation is gone from that point of view.
I don't believe it, but
Yeah.
Perception is reality to these people until it's not, right?
Right. That's what I mean. That's what I said. I think a lot of people are going to get kind of bitten in the cheek meat a little bit here when there's some sort of bounce back. And it's funny. I was, a lot of people in trading and in markets like to talk about sports analogies and things like that. I was talking with someone who said, recently the S&P 500 is more like the NBA than Major League Baseball, right? If you think of the NBA, you have, one or two stars, and that carries a team to victory. Whereas in baseball, if you have one star, he only comes up to plate 4 times a game or pitches every 5 games, right? So you can't rely on one star. But it seems the S&P 500 is a lot like the NBA, right? We have these kind of magnificent 7 stocks, NVIDIA, Facebook's, Tesla. And right now, that seems to be working, right? You hand the ball to your stars and off they go, and they pull everything along with it. But at some point, someone's going to get a torn ACL, or reality is going to come in, or some other, well-balanced.
They'll get arrested for drugs, DWI, or some heinous crime.
Right.
That's more likely, than injuries, it seems these days.
That's all too true. But that's what we're saying is that right now it's this like superstar, and you got to be in this superstar to make any real money, so to speak. And there's lots of opportunity out there. It doesn't have to be Facebook and Tesla and NVIDIA. And don't get me wrong, there's opportunity there. It's just now you're talking about a lot of volatility. There's just not a lot of diversification anymore that I'm not really seeing that. So listen, are we going to get inflation under control? Probably. Is the Fed going to stop hiking rates? Probably not, whether inflation gets in control or not. And, you got international concerns going on. We got the inverted yield curve. I mean, that will uninvert at some point. And short-term rates are going to come down a lot. Right. And long-term rates are going to come down too. And then people are going to be, wishing they had, locked in better interest rates and higher looking dividend things rather than kind of the magnificent 7. It can't all be all your eggs in one basket.
Right. So you really think inflation is over? It's done?
It's certainly not done. But my fear is more the other way around. I think it's going to be done because the Fed's going to break everything. I just, gosh, I hope I'm wrong, right? But they just have such a track record of, pushing it until it's over the limit or not pushing it enough, right?
Yeah.
And so as crazy as it sounds, like I think inflation is going to get under control. My problem is it going to get under control because they pushed it too far and they broke the economy and pushed us into this recession, which now people don't believe is going to happen anymore. It's still going to happen. You can't keep, this kind of rate up in the market and not have real returns. At some point, like I said, AA is going to have to produce something. The economy is going to have to produce something. And then, then you'll see which of the stocks are going to hold their own.
All right. So can AI pull a rabbit out of the hat?
It can. I wouldn't bet on it, but it definitely can. Some of the AI world is going to be, extremely profitable. And like I said, it's hard for me to even judge what it's going to do, right? What it's going to automate. I mean, there's all kinds of crazy thoughts. Everyone always talks about self-driving cars and things like that. And we're still thinking very classically, well, the car is going to drive itself and you're sitting behind a steering wheel. Well, it might be that eventually a self-driving car means it's an office, right? And you're sitting there doing work, right? And so there's more productivity going on. So, and that's even a crazy, like that's like the Jetsons, you know what I mean? Like we don't really even know what the opportunities are there. So can I pull a rabbit out of the hat? Sure. I'm not sure what's going to happen in the next 9 months or, by the end of 2024. And,
right.
And that's why I said, like, there's nothing wrong with locking in some gains right up here near the top. That doesn't mean you have to unload and back the truck up. But, we've had a really good run. It might be an idea to say, do I need to double down? I don't know that, that doesn't make sense from a trading point of view either.
No. So, well, like you said, you never go broke taking a profit on Wall Street, right?
That's right. So, and, the other thing is that the numbers that keep coming out, you got the manufacturing purchasing managers index. That's it. Every few weeks, it's being released tomorrow. All the indications are always of slowing purchasing. All right. Now, granted, some of the numbers recently have been better than expected, but even the better than expected numbers are still on the slowing purchasing side. Right. So, that's telling us that companies aren't expecting growth in the future. So how we're going to maintain this, market rally from 3,500 to 4,500, 4,500 to 5,500 with
good question.
Companies slowing down. Like, all right, does that mean we're going back to 3,500? Well, not necessarily, but I find it hard to believe that, we're going to be able to, sustain this for that length of time, especially if the Fed keeps hammering, with interest rates. That makes that's a headwind on everything.
How much longer do you think the Fed's going to keep raising for?
I think they're going to raise at least another time. And like they even openly said that it's just, we're going to keep raising until we see inflation and essentially the economy in a spot where it's going to stay that way for a length of time. So, I see at least another quarter point raise, and we'll see from there. It's getting, where are we at? Like 22-year high in interest rates? Like,
yeah, and they've never been raised this quickly before either, have they?
That's the problem. We don't know, if we've already broken our back, because of the quickness that we've done it. That's the real problem. And unwinding it just as quickly, which is certainly not good, but that's not going to fix the problem that fast either. These things take time.
Okay, I'll buy it. All right. Yeah. So what is Joe Sixpack supposed to do here? In the meantime, everything's waiting to melt down on him.
Yeah, it kind of depends on where you are in your phase in life, right? A lot of the people that we're dealing with, a couple of years away from retirement, the timing is super critical. So, focusing on interest and dividends and income is a much more important thing, which means, hey, whether the stock market goes up or down, you don't want to have to worry about it. That's more of our bread and butter. But if you have a little more time in there, then there's nothing wrong with, like I said, taking some off the table and having some ammunition, having some more, bullets in the chamber to take advantage of corrections. The rich get richer because they have cash on the sidelines to grab when things go down, right?
Right.
So from that medium range point of view, if you got the time, that's why I said lock in some gain, ring the cash register, and that doesn't mean you need to close your positions down and see what happens over the next 6-8 months. Your worst case scenario is you locked in some gains.
Right.
It may end up being a good trade.
All right, I'll buy it. So hey, basically act while there's still time.
Exactly.
Don't wait. Bernard Baruch, I'm always reminded, said, basically, I got rich letting the other guy make the last 10%, right?
Yes. Yeah. You don't need to buy the bottom and you don't need to sell the top.
Okay. So we got that out of the way. So what do we do here? I mean, we want to sell and sell sell in July and hope we don't die? Is that what the deal is?
Yeah. Well, almost August, right?
Yeah.
Like I said, I think there's a lot of complacency right now because of the summer. People aren't really looking at things, hedging. Like I said, if I'm looking at it, I'd say in the next, I don't know, maybe as few as 3 months, that may be a little short, but 6 to 9 months, you could easily see the stock market back down under the S&P 500 back under 4,000. And it wouldn't even, it wouldn't even blink an eye to do that. So that's why I was saying is like, if you've done some things have worked for you throughout the year, right? We had, big down year last year. If you've taken some, move a little bit into cash, these money markets are paying 4 or 5%. There's nothing wrong with collecting some interest, right? Because then if the markets do drop, right? Now you can get out of those things because interest rates potentially could either hold steady or maybe drop. We'll see if the Fed's going to break it, right? And then you have a reason to get out and then kind of back in because now you're buying things at a discount.
Is there a trade out there that you could make that's going to cover you if the Fed breaks it or if they don't break it?
I mean, if you really think the Fed's going to break it, then you want to be in as much kind of fixed income
and cash
as possible. Because you'll be generating all that interest while interest rates are plummeting, and then you could exit it or keep collecting the income. Like I said, that depends on your phase in life a little bit. But there's nothing wrong. Like at this point in life, there's actually nothing like it's almost sacrilegious to say, right? Like imagine investing in fixed income as a trade. There seems to be opportunity there. If you're getting a good interest rate, if things don't fall apart or they just go sideways, it's not a bad trade. And if we do hit a recession, then you can be glad you had that, All
right. I'm willing to buy it. All right, James, tell us best place to find you, poollocke.com.
Yeah, poollocke.com, POOLELOCKE.
Great. And the link is in the show notes to this interview on financialsurvivalnetwork.com. If you got a question for James, myself, email is KL@kerrylutz.com. Make sure when you go to the site, you sign up for the free newsletter. James, always enlightening, always thought-provoking. We'll catch up with you again soon.
Thanks, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.